In our today's video, we are reviewing the Cytonn Money Market Fund. Cytonn Money Market Fund is created by Cytonn Asset Managers Limited under the leadership of this gentleman and this team. It is important to note that this same gentleman, a while ago, he was the general manager of Britham's Asset Managers Limited with a part of his team. That was before 2017. And by then, in his leadership, Britham Money Market Fund used to rank top 5 in the money market chart list in its performance. His departure, or their departure in 2017, when they formed, incorporated and registered Cytonn Asset Managers Limited, under which the Cytonn Money Market Fund is, it is notable that since then, Britham Money Market Fund started going down, and at last it slammed to the bottom of the Money Market Fund performance list, as you can see. And on the reverse, the Cytonn Money Market Fund has been topping the chart for the longest time since 2017. That alone is a pointer, as per this channel, of tested professionals with experience and the know-how in the money markets. That's their performance, or the performance of the Britham Money Market Fund then, and now the performance depicted by Cytonn's Money Market Fund point to one thing: a dedicated team of professionals with the needed experience and exposure and the notoriety to reward their investors with alpha returns. Those are views of this channel. This information is not sponsored by anyone, but it's out of our research and analysis of the financial fact sheets and the various reports availed. In our review, we shall be looking at the Cytonn Money Market Fund over that period of time, and because of your demand, we will also look at the few things that are bedeviling the Cytonn Asset Managers Limited. In the meantime, if you are new to this channel or you have not subscribed to this channel, please bless us with that subscription. And because we dedicate this channel to give you value-packed information, don't forget to hit the notification button so that when we upload the next video, you will get notified by YouTube. If you are a subscriber to the channel and you are coming back to view another video, we appreciate your loyalty and commitment to this channel. Continue liking our videos. Share this video to another person. This is financial intelligence and financial literacy that we are sharing for free. You also share it for free so that we make a better society for ourselves. See you after 3 seconds break. Welcome back, and thank you for your subscription, your likes, your comment and shares. The first thing that we want to look at is the element of investment cost into these Cytonn Money Market Funds. As per this fund profile in 2021, you will notice that this money market fund was registered in 2017. It requires a minimum investment, initial investment of 1,000 shillings, and additional investments over 100 shillings. Then you are incur a management fee of 1.5%, and there are no ledger fees, as at 2021. No initial investment costs, or there are no entry fees, neither do we have redemption or withdrawal charges. From that, we would want to look at the current fund profile in 2024. The initial investment amount has been retained at 1,000. The management fee has been increased from 1.5% to 2%. The ledger fee has been introduced at 50 shillings per month. And notable and very important is that this money market fund, the returns are benchmarked on the 91-day treasury bill interest rate plus 1%. What you're supposed to get when you invest your money directly in the primary market by purchasing a 91-day treasury bill, but the fund promises to give you an extra 1%. From this chart, because it's important for us to look at what are the prevailing market interest rates with respect to the treasury bills. The 91-day treasury bill, the 182-day treasury bill, and the 364-day treasury bill. As per the 91-day treasury bill, this is the rate. This is the interest rate. And this is the interest rate as per the 364-day treasury bill. Then compare with what Cytonn Money Market Fund is giving you as a return when you invest into that fund. You will note that this money market fund has over-delivered on its promise on a return to investors. That is very important. Another thing that is very important to note is that the rate of return that you are getting from this money market fund, compare it with the other money market funds vis-a-vis the only charge, the only extra cost that you are going to incur on this one, that is a ledger fee of 50 shillings, and you realize that this charge is less than the opportunity cost. It's within the opportunity cost of the other money market funds. What do we mean by opportunity cost? Opportunity cost is the gain that you forgo from a second best alternative in order for you to choose the Cytonn Money Market Fund. And as per this schedule, the next viable alternative as per the returns reported from money market funds would be the lofty carbon. Considering the rate and the rate that you're getting from the Cytonn Money Market Fund, you realize you have a gain. You have a gain. So the returns that you are getting from the Cytonn Money Market Fund vis-a-vis the cost that you're incurring and what you would be enjoying from other money market funds, Cytonn would give you a higher return. The second thing that you need to understand is that these money market funds, all of them in general, they commuted their management fees from 1.5% to 2%. Majority of the money market funds in the top 10 list, they were charging around or in the neighborhood of 1.5%. But they have commuted to 2% owing to the fact that the Central Bank of Kenya terminated payments of commissions of 0.05% of the turnovers created by placing agents. So the purchases, the investments by these money market funds into purchasing treasury bills and treasury bonds, they were getting a return or a commission out of that agency dealing between the public, that's the main market for these money market funds, and the government, that is the CBK and CBK. That agency role was giving them a return in commission of 0.05%, which was terminated by CBK by operationalization and the fruitful rollout of the DAO ZSD applications, which has brought the market direct to CBK. So by so doing, in order for the money market funds to recover the lost revenues and other explanations, but that this channel picks that one as the main reason, they commuted from 1.5% of management fees to 2%. And that is within set maximum fees by the regulator, that is CBA, which are capped at 2.5%. Another thing that is very important is risk exposure. And we shall look at risk exposure when we look at the asset allocation for this fund in 2021 and the asset allocation by the same fund in 2024. And something that is important to note, and it's very admirable in investment, is that there is a consistency that is notable in this fund management, that they have maintained their asset allocation within the required by the regulator. Money market funds are required to distribute their asset allocation to at least 4 asset classes. That is to say, at least 25% of the fund value should be held in a particular asset class, spreading to a minimum of 4. So most important thing to note is that this fund has obediently maintained that distribution of at least 4 asset classes, as you can see. It is notable from our previous schedule on the asset allocations by various funds in the top 10. We have several that have breached that requirement. They are maintaining asset allocations of about 3 asset classes as opposed to the required 4. That is a plus for this fund. And what does it mean? Was one of the notable things from this asset allocation, it is devoid of commercial papers or corporate bonds, loans that are given to other companies. Loans lent to companies, because that is the asset class that is, we regard to it as the riskiest class in these allocations, followed by bank deposit, because previously we have observed the collapse and liquidation of companies that had borrowed heavily their capital from money market funds previously. And a good example is Nakumat. We have banks like Chase Bank, Imperial Bank, which went down with assets, equities borrowed from money market funds. So that is to say, from that asset location and the obedience in the asset classes spread, that gives you a low risk profile in this money market fund. Very important. Once we look at that, we now look at the general performance. The general performance in this money market fund, as this schedule depicts, is that this money market fund has had a consistent notoriety of giving alpha returns to its investors. This part of their report, if you look at from inception in 2017, it commutes positive increment in the returns responding to the changes or in the market interest rates of the treasury bills. And as we had observed earlier, the Cytonn Money Market Fund has over-delivered on its promise to investor as per the fact sheet to benchmark the return to the investor on the 91-day treasury bill interest rate. So the 18% that Cytonn Money Market Fund is paying to investors compared to this rate on the 91-day treasury bill, actually you will note that they are paying you a return that is higher than the 364-day treasury bill. There is a reason behind that one, and that is why we are giving this a positive review, is that in the recent amendment to regulations by Capital Markets Authority, money market funds, their limitation used to be that their investments are limited to only short-term investments. They should invest in assets that have a maximum maturity period of 1 year, 12 months. But in the recent past, that requirement was reviewed and the capping on the maturity period was stretched from 12 months to 18 months. And that gave money market funds an opportunity, or the fund managers an opportunity, to take up investments that have a stretched maturity period of a maximum of 18 months. That is 1.5 years. So necessitating or giving an opportunity to invest in longer maturing instruments. And as per investments in financial assets, the longer the maturity, the higher the return, because so the higher the risk exposure. And for that reason, would have expected money market funds to be giving returns that are not benchmarked by the 91-day treasury bill, but at least the 182-day treasury bill, if not the 364-day treasury bill. And that's why in the top 10 money market funds, you will notice that in the top four money market funds, they are giving you a return that is benchmarked under or by the 364-day treasury bill, if not the 182-day treasury bill. That is our observation in this channel, because as per their fund profiles or their fact sheets, they are benchmarking their return on the 91-day treasury bill. But there are two exceptional ones that promise to give you a return that's above the 91-day treasury bill return by 1%. And that is Cytonn Money Market Fund and Ethica Money Market Fund. And also remember, as a very important other factor to look at is the daily compounding aspect. And in the top 5 money market funds, only these two give you a daily compounding. So Cytonn Money Market Fund also gives you a daily compounded return. They distribute the return to the investor account on a daily basis, like the Ethica Money Market Fund. The only thing that we have found kind of potentially distinguishing these two money market funds above the ledger fees is that Cytonn Money Market Fund did not offer a lot of information, and that was, we were looking at the question of transparency and objectivity. When we looked for a source for the calculator for this money market fund, it required us to submit or to mine our KIC information. And as opposed to Ethica Money Market Fund that has laid bare their calculator and a lot of information for the investors. Lastly but not least is the question of the bedeviling issue on this asset manager, not the money market fund. It's important to note that the Cytonn Money Market Fund is regulated and registered like any other money market fund, and therefore it enjoys the firm security of protecting investor money like any other money market fund. The two products that had issues under Cytonn Asset Managers Limited, not Cytonn Money Market Fund, the Cytonn Asset Managers. The other two products under the management of Cytonn that had issue, they relate to the real estate investment. That is the Cytonn High Yield and the PIP product. But the most important thing that is notable on those two products is the greatest challenge that emanated from that was the COVID question, which affected a lot of business. And that has been compounded by the noise, the investor noise. There is an old adage in finance and investing that we say, pesa ipendi kelele. Money does not thrive in a noisy environment. money thrives in tranquility and peace. And the noise that we talk about when it comes to money is not music or shouting. It's playing negative information in the public galleries, especially the courts. And this did not begin with the investors in these two products. Immediately, these professionals or these individuals departed from their former asset management firm to create their own. The old money started fighting the new money. They were followed by a myriad of court cases, many of them. And that is very normal in any environment. But there is also something that is notable. When you are bringing a new, when you want to disturb the existing status quo in some industries, you are bound to face a lot of stiff resistance or boycott for your entry. And that is what, as per this channel, we have observed. What Cytonn asset managers were bringing to the market was a new innovation of accessing capital direct from the primary market as opposed to using the existing channel in the banking industry. Cytonn innovatively and in their notoriety to reward the investors with high returns, they wanted to give the investor what they would have otherwise been giving banks as interest rate. Very recommendable. In other markets, that is very possible. But in our local market, as this channel observes, is that the banking sector, the owners of the firms sitting in our banking sector heavily control the capital markets. And that is the reason the growth of capital markets and its benefits have been overshadowed by the banking sector, which, as its primary business, is not equity provision or capital provision. We don't want to delve into that too much. This channel does not have a good look. So those are the challenges that are faced by the Cytonn asset managers. And because of this noise playing in the courts, most of capital owners who would have wanted to put money in those products have to withhold their investment until this noise calms down. So this channel observes that there would have been other better alternative ways of settling those disputes, including conversion of those debts to equity. But that is reserved to the processes in the capital markets and the Cytonn managers. We are not devoid of sympathy with the investors whose investments have been held by those investments. But we hope the liquidation process will yield positive return to the investors. Thank you for watching.